Meantime, earlier in the hour, Treasury Secretary Scott Bessent joining us with an update on the tariff talks. Here's what he had to say about reaching a trade agreement with China.
I believe that it's up to China to de-escalate because they sell 5 times more to us than we sell to them. And so these 125, 145% tariffs are unsustainable.
Secretary Bessent also touched on investing in America versus Europe.
This administration is committed to is keeping the U.S. the best place in the world for capital to arrive. And we are doing that. We're going to have tax certainty. We are going to not be taken advantage of in trade anymore. And we are going to deregulate the deregulated large economy in the world. If you look at the Draghi report, he says that Europe has basically tariffed themselves.
So, look, he may be right. Long term, I think we do have leverage over these people. The question, of course, is how much patience we all have.
I'm trying to
sure.
Threshold for
I was looking at it whether I don't want to invest in Europe versus the United States. I don't know if a lot of people would want to do that because they do have a lot of systemic issues. And just historically, we know how the averages is stocks have performed there and how growth. The question, I guess, then comes, if Europe is going to invest outside itself, would it actually align itself with China? And would we drive other investors into China's
arms? Look, I think that's the huge possibility.
I know, but would that really happen? I mean, I think you really have to
be angry.
But accept a lot of. I mean, you're investing with a country that has, concentration camps for Uyghurs, that has I mean, it is not a great place in terms of human rights, and it's a CCP. So if the Euros want to get in bed with such an unsavory group, it's hard for me to believe. It's like when people would go and invest or investing in Russia. Same difference.
We seem to be moving in that direction.
I'm not so sure. He said now he's talking about secondary sanctions and
because
so that's what I'm trying to figure out. Now India, I could see. India, you could see. India doing well in terms of capital.
And by the way,
being invested into
India is allied with Russia,
right, or China,
and China.
Right.
I mean, both of them. So I'm not sure what we're talking about here.
I'm saying that it's going to be very difficult to not. That the United States would have to do a lot more than it's done to drive investors away.
Meantime, Wall Street's just waiting to see any sign of progress with these deals. I think this morning there's not a huge push one direction or the other. We're in positive territory this morning, not by a lot. We weren't down by a lot earlier, so I think there's a wait-and-see attitude. Let's see what it looks like with any potential deals or any news of progress on those deals, too.
Meantime, President Trump planning to sign an executive order today that would require the Attorney General and Homeland Security Secretary to compile a list of sanctuary cities and states. That's according to a Wall Street Journal report. The cities and states on that list could face a cutoff in federal funding and potential legal action if they refuse to change their policies. Now, President Trump will also sign an order directing the DOJ to pursue civil rights cases against cities or states that it views as favoring the rights of immigrants in the country illegally over U.S. citizens. It specifically calls out laws to provide immigrants in-state tuition at public universities, but deny those lower rates to out-of-state U.S. citizens. That's an interesting one, which I had not spent too much time on.